Right, welcome and hope you're all well. Just half an hour away from the opening bells, Hong Kong, in Shenzhen and in Shanghai. You're watching the China Show. I'm David Ingles, by the way. Our top stories today, we're looking at shares of Alibaba towards the open here after the company scrapping the IPO of its logistics arm, Cainiao, citing economic headwinds and also regulatory uncertainty. Now, the Baltimore bridge collapse is set to disrupt global logistics and supply chains for weeks. Authorities are suspending search and rescue operations with 6 people presumed dead. And we're headed to the Boao Forum live there. Of course, Stephen Ang, our chief North Asia correspondent, is our man on the ground. And we're looking at, of course, at the Asian version of the World Economic Forum taking place and the conversations taking place there. Investors certainly watching for signals from Chinese officials on the economy and also the investment climate. It's quiet on the market front, at least up until this moment. It's fairly busy still when you look at the agenda ahead as far as just these various events and metrics and indicators we're tracking across Greater China today. So industrial profits in about 28 minutes from now, in about an hour's time, or 90 minutes time, of course, there's a panel taking place which will include the PBOC governor at the Boao Forum, this reported meeting between the Chinese President Xi Jinping and U.S. business leaders. We'll talk about Cainiao in a moment. No reaction as far as Alibaba shares overnight. We're concerned. We'll see what that looks like, of course, going into the session today. Speaking of earnings out of BYD, record year 2023, although missing estimates there. You did get margin expansion there, so we're looking at EVs. We're looking at Apple-related suppliers coming off, of course, what came out to be, again, a weak month for the China business back in February. And, of course, in terms of data points, occupancy out of Macau, hotel occupancy comes out today. Now, we talked about earnings. The biggest of the biggest coming out with earnings these next, couple of days or so. So when you look at today, for example, you look at Agbank, Bank of China, and ICBC, 3 of the big 4. If you include the likes of Postal Savings Bank, you pretty much get a fairly good representation of earnings. So everything from net interest margins, given, of course, the incentives to help aid this economic recovery, and as it pertains to extending credit, if you will, to this next group, as you can see on your screens, of companies. So we're also looking at property earnings coming out today. Real estate exposure, we'll unpack that in a moment with Francis Chan, of course, out of our Bloomberg intelligence team, and that's certainly one to watch. Futures are pointing down 0.4 of 1%, so do, of course, keep your eye on that. Now, this is coming against the backdrop of really, and I think I alluded to this enough at the very top of the show here, there's really nothing happening across these markets today. So we are trading sideways, if not mixed. U.S. futures are still pushing higher in the Asian session, which I guess bodes well going into the U.S. session on Wednesday. Although that being said, a quarter of 1%, Nikkei 225 0.6 of 1%. Kospi index, as you can see, is coming off quite a good day. ASX 200s, we have a big guest coming up, by the way, out of Boao. Andrew Forrest is joining us, so stay tuned for that interview. Taiwan is coming online, and we have this really good piece today out of our Bloomberg News team talking about how the AI theme has really played out across some of these markets in the region that have a good AI representation. Taiwan and Kospi, I'm looking at you there. 2 and 10-year yield right now, nothing much happening as far as that's concerned. The Chinese currency story has sort of faded back into the background as far as that sort of dominant theme is concerned. So we talked about the renminbi, for example. Big day Friday, big day Monday, flattened Tuesday. Although that being said, we're still looking at what the fix looks like today, and if there's any sort of incremental change from what we got yesterday out of the PBOC. 4-day losing streak on the NASDAQ Golden Dragon Index. Within that, of course, in the big news out of Alibaba on China news, pulling that IPO. We'll talk more about that. In terms of early indications, we should not be getting any pronounced moves in the early goings, just simply based on how these traded overnight. Very quickly, A50 futures are doing this. Also, when you look at China and your CGB yields, of course, we're looking at about 2.3% there, 2.32%. And we are trading at about these levels. We're still trading near the highest of the year, if not at the highest of the year here, for dollar China. Dollar onshore is one to watch because we have been flirting with the top end of that allowed trading band, 2% to the upside of that midpoint, which at midpoint, of course, comes out in about just under 10 minutes from now. Bloomberg Dollar Index, nothing much happening there. We'll take you straight back. The Boao Forum, the annual one taking place, of course, there. It's billed as the Asian version of the World Economic Forum in Davos. Stephen Engel, our man on the ground, is there with our next guest. Steve.
All right, David, yes. We are back to normal because we have our guest that we used to interview all the time here at Boao. He's on the Boao board. He is none other than the Fortescue Metals chairman, Andrew Forrest. Thanks so much.
Great to be here, Steve.
It's been 5 years. Long 5 years.
Yeah, since we last saw each other.
Since we last saw each other and can talk about China. Now, obviously, you have been very bullish on the China market and as selling iron ore into this market. And we saw, obviously, the miraculous transformation over the last 3 or 4 decades in China. Things are slowing down right now. There are geopolitical threats. How much of a threat and how much of a competitor is China versus the opportunities that you've always seen here?
Look, maybe you're referring to the iron ore price. I see it as a bit of sport, Steve. You know, it goes up, it goes down. It's like a tennis game. But I don't see China as a threat. I advise everyone to not see China as a threat. And I certainly say to everyone in China, don't ever be a threat. The beauty of Asia, the beauty of the Boao Forum, is that we can all compete. We're all technically very, very capable, very professional. We love that energy of competition. When we obey human rights, when we look after the environment, that lifts the standard of all of us. And this is the Boao Forum for Asia. This is the Asian community working together, different politics, different religions, different ways of doing things, different culture. But we all get on. And when we compete successfully, everyone wins.
Okay, it's a bit of a sport. Let's get into iron ore. I know you don't like projecting prices, but it's been a volatile game, if you will. And we are hearing, though, the iron ore inventories are piling up at the ports. We know that steel rebar prices are at a 7-month low. Look, they're not building as much. They are going into new productive forces, into AI and semiconductors and some value-add services, less roads, railways, bridges to nowhere, and the like. What does that mean for you?
Steve, that's such a quick slip in, isn't it?
I'm just playing the devil's advocate here.
I love it. Look, I've been part of this country for about 35 years. I've just seen it change, evolve. Now, yeah, it had a big housing run, then big infrastructure run, and now it's got a big technology, green energy run. It's still doing housing. It's still doing infrastructure. Don't think for a second. That 5% growth, that is like years back, but at 5% pretty ho-hum. Coming off a small economy, this is a monster economy now, Steve. 5% of that volumetrically is massive. I challenge my country, hey, we're hardworking, we're super smart, we're determined. Why can't we do 5%? That 5% will translate into huge demand for commodities. Now, I don't mind if the iron ore price goes up or down. It's set by a free market. Anyone tries to meddle with that free market, they pay for it badly in the long term. But while free markets exist, you will always get supply equaling demand by that great agreement price. So I'm very comfortable about it.
Do you have more clarity than the layman like me in a property market mess? I mean, we have other bellwethers, Vanke, Country Garden, others who are defaulting and potentially going under.
Yeah, I do.
This is a big problem. What's your
I do. I want to give you the inside scoop. Inside scoop, right? So if you're building out infrastructure and housing the size of Australia every year, then you're going to overshoot and undershoot. I mean, it's just how it's going to happen. Even AI is not going to work that out for you. So I've seen China over 3.5 decades go from undershooting and prices go through the roof, overshooting, prices go down, but generally they get it right. And the long-term trend is just heading upwards now. Green energy, that is a monster consumer of everything, right? And so it should be, because we're not taking all this rubbish to destroy the world out of the ground, where it should never move from. We're making all the energy, all the metals, just from the air moving, from the sun shining. That's the future of humanity.
Well, how is the transition?
And that's taking a huge amount of metal.
How is that transition going, though? Because most of your revenue still comes from iron ore. I mean, the vast majority of it. But green hydrogen and other projects that are dear to you, how is that transition going? And it has been delayed. Does it potentially get delayed by, I know you're not going to say it's a slowing Chinese economy, but it's a slowing pace of growth in China.
No, look, if you're talking globally, there's a whole heap of fish swimming with the tide now, very trendy. They've just worked out there's a war in Ukraine. You're a genius. How'd you figure that? Oh, by the way, oil and gas is incredibly volatile, and green energy's not being supported by politicians as they should be because they're not being held to account by their populations. And so everyone's saying, well, if you're going into green, you're a little woke, etc., and we should just stay practical and stay with oil and gas. I can tell you that will be no solution. This will be like COVID, where there was pent-up demand. We weren't able to see each other. You and I missed each other for 5 years, right? But the demand pent up, and then once we could, everyone travelled, demand went through the roof. This will be the same, Steve. There is this period of time where, because of volatility in prices, because of uncertainty thanks to Ukraine, Gaza, etc., everyone's jumping on the bandwagon of weak character, of not having the courage to see over the horizon, see, actually, we don't move away from fossil fuels, then we will be held completely accountable. When we're told, oh, well, hang on, it was uncertain times back in 2024, so we didn't do anything. And people are going to say to us, what? You couldn't chew gum and walk?
Yeah.
You couldn't breathe while you walked upstairs? I mean, you should have moved away from fossil fuel and gone into energy which is harmless as quick as you possibly could, and that's what Fortescue's doing.
Chinese Foreign Minister Wang Yi was obviously in Australia a week ago. You were just in Beijing at the China Development Forum. What's the key message you got from the Chinese leadership, which has been fairly opaque in its policy messaging? They're not having press conferences. They're reading from the same script from the top man, understandably so. But what did you glean?
Well, not really understandably so. I mean, when we have media coming through our organisations, we've got 20,000+ people. We don't have a script. I mean, Bloomberg walks onto any site it likes and just speaks to any punter out there wearing the high vis and the proud Fortescue helmet, and they are pumped. And they say, well, this is what we're doing and this is how we're going. When you all read off the script, then people are understandably thinking, well, hang on, where's the naturalness in this? Where's the spontaneity in this? So I would say, of course, just be natural. This is a fantastic country. You're doing well. Make sure you stay at peace with all your neighbours. That is key. And also know that the Boao Forum for Asia is the boiling pot of great competition, great technology, great business. And when we stick to minimum human rights levels, which protects us all, when we do as President Xi's asked of us all, which is to realise that humanity is nothing unless we have a great environment. If you don't protect the environment, then see you later, humanity. He gets that. That's how he grew up. He saw the environment destroyed and he saw poverty come into his community. So we've got to learn from that lesson globally. And I'm seeing this competition and this collaboration and this friendship from the Boao Forum. And it's an example for all of the world. Different politically, different religions, yet we all get on.
Yeah. It does take two to tango. That's my devil's advocate approach. Yeah. You have to look at both sides, obviously, all sides. Okay, you're talking about the environment. You're also talking metals. Are you glad you got out of nickel? I mean, Weibo metals, you closed down some of those mines. There have been allegations of Chinese and Indonesians kind of flooding the market with lower grade nickel. There's been environmental damage around Chinese mines. Are you glad you got out?
No, I mean, I'm still...
Are you going back in?
I'm still so long nickel it doesn't matter. I mean, I'm so long. And look, we'll continue to invest in nickel and renewables everywhere. At Fortescue, it's copper, it's lithium, it's the whole suite. Rare earths, obviously iron ore, integral to the energy transition. What I say about that particular instance is I've watched China start to really protect its human rights. And, you know, I'm talking the hot buttons like Xinjiang, etc., where more and more audits are being done by companies like mine who just cannot touch anything to do with modern slavery and never will consciously. I'm seeing the attitude come into the environment led from the top saying, hey, we have got to lead the world to go green. If we don't, this planet's and every human in it's cooked. So I'm seeing that. Now, that's working in China. Now, China has to take that additional step, right? If you're getting your human rights right and your environment right at home, that's got to be the same as your supply chains. And when I look at Indonesia, what I'm seeing is very delicate and rare tropical ecological systems get destroyed at huge scale. I'm seeing coal mines get switched on, coal-fired power stations get switched on. I'm seeing tailings getting dumped in the sea and washing hundreds of kilometres up, destroying marine ecosystems, which I happen to be pretty close to. And I'm saying, well, thank God we didn't do that. We were offered those opportunities. We didn't take them. This is where countries got to say, well, if I'm looking after my country at home, I've got to have exactly the same standards when I'm overseas. And that's not happening in Indonesia. And I'm saying to the London Metal Exchange, hey, you're getting people who are doing the right thing, competing against people who are destroying the environment. You, London Metal Exchange, have to determine the difference of that. Otherwise, you're part of the problem. You're part of the environmental crime. And I'm saying to those Chinese investors, clean up your act. Stop rubbishing the ocean. Stop destroying the rainforests. This is where we must all step up as humanity and do what President Xi's asked of us to those China investors. Protect the environment. You don't protect the environment, you destroy humanity. And I'm saying, quickly come back from where you are. You've had a really bad start. You've produced really cheap nickel. Congratulations. But you're destroying other people's future. And I say to Tesla, I say to the Chinese car companies, I say to all those battery makers, buy your nickel from there. You too are part of that environmental crime. And let's just say, okay, let's get these nickel mines right. Let's run them on green energy. Let's not destroy the marine environment. Let's work out how to mine and reforest, but not destroy.
Reforest, Andrew Forrest, thanks so much. Always good to see you. And we'll have a glass of Penfolds one of these days when those tariffs come down on Australian wine.
We're on.
All right, Andrew Forrest, always colorful, always a good guest here on Bloomberg Television. Back to you guys.
Yeah, well, why wait for the tariffs to come down? Have one right now. That's a beautiful location, of course, to enjoy. Not just one, Steve. Come on, live a little bit, maybe two. Reference rate for the day is out, and this one is actually quite newsworthy and substantial. So this is the strongest so far this year as far as support. So the midpoint of the day, and bear with me here because this is a bit nuanced, the midpoint of the day has been set at the strongest two estimates so far this year. We're talking nearly 1,300 pips, that difference between the two. So quite a sizable support measure coming through. Counting down to the open, now trade futures are pointing down. Shanghai, Shenzhen, and Hong Kong. The open 13 minutes away. This is the China Show. Oh, almost down to the second, just in time. Shares of Alibaba coming alive in the pre-markets were down. We're trading below 70 bucks. The big news, of course, is the company calling off its planned Hong Kong IPO for China, blaming what it calls a pretty depressed market. It's the latest change, really, to this planned massive overhaul announced a few months back here of operations that actually included the six-way split. Now, since then, it's also canceled spin-offs of its cloud and grocery units, changed the heads of its e-commerce and grocery businesses. So I know it's a bit, makes your head spin, doesn't it? Let's bring in Sarah Zhao, of course, to talk us through, of course, why we're here, the reasons behind it, and risking sounding like the Backstreet Boys. Sarah, tell me why.
Well, basically, we had Alibaba's chairman, Zhou Cai, come out last night to try to explain their decision. He described it as basically two main drivers. The first is, like you said, the depressed IPO market. They're not getting the valuation that they want or that they believe Cainiao to be strategically valued at. So it's just not a good time now or in the foreseeable future. And the second is that they say that Cainiao is really strategic to their core operations. So that's the e-commerce side. Both domestically and internationally, they need to expand Cainiao internationally in order to remain competitive in what's a very competitive e-commerce market.
Right. Patient capital, I think, is how they phrased it. So they own about 64% of Cainiao, and they're buying back the rest of the shares that they don't already own. What was behind the decision, and how did they plan to do that?
So that's exactly right. It's part of their, motivation to double down on this Cainiao investment as part of their core operations. So that's why they want to buy back the rest of the shares from minority shareholders and also from employees. They say it's also a way to return value. I'm sure some of those investors were counting on an IPO to cash in, and that's another way to just boost morale and return value to those shareholders.
Okay, so is the restructuring still happening, or is this a restructuring of the restructuring?
I think
announced a few months back.
Yeah, that's a good way to put it. I think there have been several hiccups in the process. Since they announced this restructuring last year, we saw, like you mentioned, the cancellation of the cloud, IPO, also Fresh Hippo, the grocery arm, their IPO also being put on the back burner, and lots of just reshuffling of leadership in all the various units. Their new CEO, Eddie Wu, he's now personally taken the helm of both cloud and commerce, domestic e-commerce. And so they're really just making strong moves there. Also on this, in terms of focusing on their core operations and selling off non-core assets, they say they're making good progress and really just focusing in on commerce and cloud.
Okay. Thank you so much. Clarity granted. Clarity has arrived here. Sarah Zhang, our Bloomberg China tech reporter. Shares of Alibaba should be bottom of your screens. We're down 2%. Pre-markets are doing this. HSI is down 0.5%. Maybe that's really the majority, the Alibaba effect. Lots of earnings reactions to unpack and lots of earnings to preview. All that is just ahead. The open 7 minutes away. You're watching the China Show. Okay, futures and initial pricing on your screens shortly. There we go. Thank you so much. We are poised for a lower open, maybe down to this incremental move we're getting out of Alibaba. We're down, we'll show you the stock in a moment, I believe 2%. A lot more support coming through. 1,300 pips was the difference from the midpoint of the day, which came out a few minutes ago, to the estimates. Dollar China, though, trading at 7.25, which basically takes you back to November levels. We'll talk about the yuan story in a moment, and really the story which we put out earlier on. Conflicting signals. We'll talk more about what those signals are and maybe how to read the tea leaves. Speaking of tea leaves, we'll talk about Nongfu Spring because tea sales actually picked up and Nongfu actually outperformed. And before we get to that, there's some changes in terms of analyst actions here. And certainly within this, when you look at AAC Technologies, almost did it on purpose. Apple suppliers are very much in focus today, given, of course, another weak month in terms of China sales. Race to buy, though. HSBC, $33 a pop is a price target from the bank here. That takes us into, well, some of the stocks we're tracking here. So it's a very big banks earnings day today. ICBC, BOCOM, just two of the few more coming out. Nongfu Spring, tea sales strong, profit beats, Baba down 1% in your pre-markets, among other things. Have a look at that on your screens. Oh, there we go again. This is Bloomberg. Welcome back. Happy Wednesday morning. You're watching the China Show, 40 seconds away from the midweek session. If you had to pick your, what was that series of books a few years back? Choose Your Own Adventure? I remember growing up with that. If you had to choose your own adventure, I'd pick Shanghai over Hong Kong in terms of the weather. In terms of price action, though, I think you'd be pretty much not better off either way. We are looking at weakness going into the session today. The PBOC coming in with a lot more support for the currency, 1,300 pips, give or take, was the support. The estimates from the fix, that's the spread there. The other thing we want to mention is in about an hour's time at the Boao Forum, the PBOC governor will be part of this panel, so stay tuned for more, perhaps headlines coming through. It's a big earnings day. Weakness, as we were pointing out. Alibaba's down about 1%. I correct myself. I thought I was down 2%. We were down 1% on Alibaba. We're opening lower in the CSI 300. Hang Seng Index 16.5, down 0.7%. We're led by tech, as you can see on those tiles leftmost sides at the very top, 1.3% to the downside. We should be getting any moment now industrial profits numbers. So these are year-to-date numbers, right? January and Feb. We're still waiting on that as well. And just keep in mind seasonal aberrations. You combine the 2 months. All that being said, if you compare what perhaps we will see from these numbers today, we're down 17 straight months. So possibly, quite possibly, we get the first expansionary print, if that does come out, of course. We're still waiting for that as we speak. So expansionary compared to the period before. So the period before, because it's a time of the year, so it's January and Feb off last year to January or Feb this year so far. Okay, data should be out, and we're looking at, okay, yeah, here we go. So we're up 10%. 10.2% year on year. So this is actually an encouraging set of numbers, although aberration, nuanced. This should be, and if you're looking to write a headline, maybe this is it. This should be the first time we're getting a growth or expansionary print on this specific metric going back to mid-2022. So April 2022, I believe. There we go. Flip the boards, please, if we can. Alibaba, BYD, 10 billion profits, full year, 2023. All of that being said, missed estimates by a very slight margin. That is Tsingtao and Haidil actually beat estimates of both these companies. In fact, we've just organized this so it's a bit more clear, perhaps. The next board actually shows you the 4 companies, among others, that have reported, and all 4 companies coming up on your screens actually missed estimates. So Wuxi all the way down to China Telecom. Mengniu down 8% on also that earnings miss. Okay, we'll leave the China market story there for now. We'll revisit this a bit later on and get a sense really of some of the other big movers we're tracking. In the meantime, though, the other top story we're continuing to track going into Wednesday in the Asia Pacific here is the Baltimore Bridge collapse. Here, officials say active search and rescue operations have been suspended. 6 people unaccounted for, now presumed dead. The disaster happened when a cargo ship lost power and then rammed into the Francis Scott Key Bridge in the early hours of Tuesday morning, destroying the span in a matter, as you just saw there, in a matter of seconds. The state governor says a mayday call from the ship allowed authorities to limit vehicle traffic on that bridge.
I spoke with Governor Moore this morning, as well as the mayor of Baltimore, the county executive, both United States senators and the congressman. And my Secretary of Transportation is on the scene. I told them we're going to send all the federal resources they need as we respond to this emergency. And I mean all the federal resources. And we're going to rebuild that port together.
Bruce Einhorn is here with us on set to talk us through the many facets of the story. Bruce, I guess let's start with the ship itself.
The ship itself is the Dali. It's sails under a Singaporean flag. There's a Singaporean company that is its operator, its manager and operator. That's called Synergy Marine Group. Synergy Marine says that the owner of the ship is also a Singapore-based company, Grace Ocean Private Limited. I'm sure we've all seen these pictures of the ship. One thing keep in mind, as big as this ship is, this is not one of the biggest ships out there. This is actually sort of a mid-range ship. It has about half the capacity of some of the really largest container ships. It was only built back in 2015, so not really that old. There were 22 crew members on board, according to the manager of the ship. All of them Indian, and all of them were fine after the disaster. Ship executives were company executives on their way to Baltimore to address the situation.
Right. Talk to us about other angles to the story that we should be keeping an eye on.
Well, we just saw President Biden talking about determination to rebuild the bridge. There was a bridge collapse last year in the Philadelphia area. I think it was in Philly itself, which is some people have made comparisons to, and that bridge on major route I-95 collapsed. They were able to rebuild it fairly quickly. This is a far more complicated task because, of course, it's over a harbor. It could take billions of dollars. It could take a very long time. The port itself is extremely important. It's the largest port for handling autos and light trucks in the United States. It has been for 13 straight years. Is also one of the largest, I think the second largest port for export of coal. There are a lot of companies that have warehouses and other facilities upriver from the bridge, such as Amazon and FedEx, BMW, Volkswagen, Under Armour. So potential for supply chain chaos, at least in the short term, is pretty high. Separate from all that, you also have the traffic on the highway. So there's now going to be a need to have traffic diverted, potentially adding considerable time to people's commutes, also making it more difficult for goods to go up and down the eastern seaboard. So lots of potential for supply chain challenges that can go on for quite a while.
We'll keep on top of the story. Bruce, thank you so much. Bruce Einhorn there, but the latest here on the bridge collapse that took place, of course, on Tuesday, early hours of Tuesday, local time. Just very quickly, a recap really, and we're looking at markets right now. We're down about 9 cents at 1% on MSCI China. Jan to Feb industrial profits coming through. So we have the absolute value. We also have the change. Absolute value coming in just over 900 billion renminbi on a percentage basis year on year. That's about a 10.2. There we go. Thank you so much. 10.2% increase from the year before. I believe this should be the first expansionary print going back nearly 2 years. Plenty more ahead. This is Bloomberg.
We do expect PBOC will provide more support to banks via these social responsibility. For example, last year the PBOC expanded their balance sheet by more than 4 trillion and injected liquidity to banks via MRF and the relending tools. So this year we think that, for example, the structural tools used by the PBOC could expand more than last year.
That was Shujin Chen, Jefferies, talking to us just over an hour back, in fact, 2 hours back, actually, my mistake there, on the upcoming bank earnings coming through and that sort of broad theme of PBOC support, encouraging the banks to lend to where it's needed. Speaking of what's coming out today, there we go. ICBC, Bank of China, Ag Banks, so 3 out of the big 4 plus other big 2 due out with earnings today. For what to watch, what to keep an eye on across just this countless metrics that banks can come up with. Let's bring in Francis Chan, who, of course, is our senior banking and fintech analyst. Take your pick. So give me one indicator that you're watching most closely. The closest thing you're watching.
Well, for the banks' earnings prospects in 2024, we would like to focus on net interest margins.
Okay.
It has been a drag to their revenue throughout 2023, and it remains a big drag to their top line this year. I think the key would be about their funding costs, especially the deposit costs. They didn't fall fast enough to cover up what Beijing is asking the banks to do, which is to lower the borrowing rates for the overall economy to stimulate the economy. So this may still cap the top line growth to maybe low single digits growth this year. Otherwise, everyone is watching, or scrutinizing the numbers about asset quality.
Okay.
So far, as we have seen for 2 major banks which have released the results, it has been surprisingly good, with improvement in non-performing loan ratios, special mention loan ratio, and overdue ratios. In particular, for real estate loans,
right.
They have less exposure and low NPL ratio for that sector. The $1 million question is where has those bad loans gone?
Oh, yeah.
If it has been in the economy, but it's not with the banks.
So where is it?
Yep.
So in fact, we'll talk about real estate in a moment because I want to ask you your thoughts on exposure there. But can you talk to us a little bit more about asset quality? In other words, from the 2 that have reported, does that then mean less provisioning?
Yeah.
Okay, for the other ones coming through today, can we make that conclusion this early?
Likely, on a year-on-year basis, there could be less provisioning compared with last year. They do have enough buffer, like NPL, the coverage they have, enough to lower provisions for 2023. In 2024, they may still have some room to contain credit costs in order to boost the earnings. So this year's earnings, at the very least, will be positive growth.
Right. Now, I think it was late last year on real estate exposure, we've started to see less extension of, I think, credit in terms of the overall loan book based on PBOC data. So I'm wondering, as far as the exposure to real estate is concerned, what are you watching closely here?
I think the Beijing government is asking the lenders to help out to finance the whitelist property projects.
Yep.
As agree with the provincial officials. And those will be the priorities. But for the developers like the parent, or especially for those private ones which are in the distress situation, they will find harder to get funding.
Okay, Francis, thank you so much. Great stuff. You can find Francis's work, BI-Go for our Bloomberg clients, senior banking and fintech analyst, from one part of the earnings spectrum to another. Certainly yesterday, BYD was a big one to report. Record profit, those slightly missing estimates, came in line with the company's own forecast. I think that's the qualifier. Their shares are down 2.2% in the first 12 minutes of trade here in Hong Kong. Linda Liu, our Asia transport reporter, is with us to take us through many ways to look at this. Record profit, although they missed. So, but just, help us understand what's important here.
Yeah, I think the profit miss really shows that this intense price war going on in China's EV market is eating into BYD's bottom line. And considering that they themselves kicked off this latest round, slashing prices on so many of their car models, it really just shows they are probably intent on sacrificing some of these profits for volumes to really maintain their market lead in China.
Well, what's in store this year then?
For this year, we're really watching for what's the volume guidance they're going to set. Last year, they managed to just achieve 3 million vehicle deliveries in line with what they set, and that's about a 50% rise from the goal they set the year before. And this year, we're definitely not going to see another kind of massive increase in their deliveries goal. And so the indication that they give from how much they expect to sell can really show us what they think the Chinese EV market is going to develop.
Okay. The other theme here is sort of overseas sales of Chinese EV makers. And I want to get your, what's the latest here? So China, we understand China's filed this complaint at the WTO over, I think it's the Inflation Act, if I'm not mistaken, out of President Biden. What do we know about this complaint?
So obviously, China alleges that these rules set up by the IRA, which has this restriction on foreign entities of control, of which China is one, essentially kind of limiting the amount of input that the EV supply chain in the US can have from these Chinese companies. And I think with the WTO rules, it's an interesting case, given that the US will say, well, China, you've also, used protectionist measures in the early days of your auto industry, and that when foreign automakers wanted to enter the China market, they couldn't do so alone. They needed to enter into a joint venture with a local partner, essentially sharing profits and technology know-how. So I think it's going to be interesting how the WTO will deliberate this complaint.
Okay, so it's been filed. Out of our hands now, I guess. It's up for us for report. Linda, thank you so much. Linda Liu there with all things EV. Let's stay slightly on theme here still. So Ford actually says it remains confident on growing competition, to Linda's point just now here, in the EV market. A CFO, John Lawler, told us where the U.S. giant is actually focused in terms of matching its Chinese rivals. Have a look.
It's affordability. They have a low-cost structure. That's where our small EV comes in, as well as that skunk that skunk group that is working on that low-cost, very advanced architecture for EVs, where we think we will be able to compete with the Chinese and other low-cost manufacturers.
Well, it's going to be definitely interesting to follow the developments there, but let's get back to hybrids. I'm super interested in this space, and it was interesting, actually, you had Morgan Stanley's Adam Jonas out with a note this month that he sees the, quote, hybrid renaissance as really a direct competitor for that incremental EV buyer. Do you see that within your own lineup? Do you see hybrids taking share from EVs?
We see hybrids as a duty cycle alternative for customers. Electric vehicles duty cycle doesn't work for some, and those that don't want just pure gas vehicles or diesel vehicles, they can go for a hybrid. That's why we've continued to invest in hybrids. We continue to offer hybrids. So you can see it as a bridge to full electric, and we think it's something that consumers are really leaning into because of all of those factors I cited.
Do you have plans to roll out more hybrids?
Yes, we do. Well, we're launching a new Escape. We've just launched a new Escape hybrid. We're launching a Kuga hybrid in Europe. And so we have the #1 selling truck hybrid in the Maverick and the #2 selling truck hybrid in the Ford F-150. So we're #3 in the U.S. in hybrids, and we continue to plan on offering more solutions to our customers.
And that was John Lawler with Katie Greifeld, really on all things and how they really plan to position against their Chinese EV rivals there, for one. Coming up in the next hour, in fact, we'll be speaking with Matty, Zhao at BofA Securities. So they actually specialize. So we'll look under the hood. We'll even unpack the battery itself. So they actually put out quite an interesting report on what they like across not just the EV supply chain, but when you unpack the batteries, which bit that goes into those batteries they think makes a good investment proposal. at this point in time. So stay tuned for that interview coming up in the next hour of the China Show. Plenty more ahead. This is Bloomberg. All right, both yuans, offshore and onshore, as you can see, are trading weaker. Onshore just coming online about, 20 minutes back here. 722 in the spread between. It's something, certainly one other metric to watch here. The other metric that we've been tracking is really the spread between the estimate and the midpoint of the day. And certainly our producers who are watching this very closely were given a treat when the PBOC came in with the strongest fix yet. Relative to estimates, 1276, that's the number of pips here relative to estimates, and you can really see that on this chart. Biggest spread so far this year, in fact, biggest support, if you want to measure it by that standards, going back to about October of last year. Tanya Chen is with us here to talk us through the significance of this fix today and how this fits into everything else. So what's going on? Let's start with today.
Yeah, I love that chart because actually I feel like it kind of shows you that even late last year they were doing even more to boost the yuan strength, right? So we're not even at those levels yet. A couple of things. I think the past couple of days they've obviously done the rebuttal and it's been kind of stronger fixes again, right? But one thing you've noticed is that they've kind of allowed the yuan to weaken past the 7.2 line, which that was a line that they had previously held for the last kind of 6 months, right? Yeah. So that's one interesting aspect of it. We have seen some state banks kind of selling dollars again to kind of defend around 7.2, but clearly right now the yuan on the onshore is 7.22. And then I think the other question is, what is the next line in the sand, right? And 7.3 was kind of an area that they were kind of capping it at late last year, which is where you saw on that chart how much fixed was kind of being held at that level. And I think one way to look at it is actually implied volatility. We haven't actually seen implied volatility spike to the levels that we saw when the yuan was actually pushing 7.3. And it also hasn't really spiked to the same levels that we saw in the 2018 kind of trade war episode or when the yuan was devalued at 2015. So actually, in terms of a volatility gauge, this actually doesn't seem too bad.
Well, okay, speaking about line in the sand here, so what are the numbers now that people are talking about?
Yeah.
The new numbers.
It's actually quite funny. So our team did a story today on kind of like the conflicting messages around what the PBOC is saying, right? And it's actually led kind of to a divergence in what Wall Street is saying about the yuan. We have some people who are still very bearish on the yuan, 7.4, and that's partially due to like the deflationary concerns, the economic considerations around the economy, and also not to mention just the Fed and the interest rate differential, which has dragged down other key Asian currencies as well, including the yen. And I wanted to actually kind of go back to another spread that you were kind of, that I wanted to bring your attention to, between the offshore and the onshore. And one way to also look at kind of where the market is testing that direction of the currency. Right now, or at least in the previous sessions, we saw the offshore and onshore spread around 300 pips. And usually when that happens, you can see that means the onshore sentiment is actually quite bearish.
Yeah. You know what? We're exactly at 300 pips. Right now. That's amazing. Tanya, thank you so much. You can check out, of course, the story that they put out today, the headline in case you need a search clue. China confuses yuan traders with surprise changes to the fixing. StoneX out with a comment here. Ambiguous messaging may help the PBOC achieve its goals. Strategic ambiguity. There we go. Anyway, a look at markets. 23 minutes into the session. There's a very big earnings theme coming through today in terms of earnings reaction and why. Quite a substantial move here in GDS, of course. There we go. GDS Holdings traded here in Hong Kong, down 27%. That's the biggest drop since 2022. Wider than expected loss coming through here out of the company as well. Citi out with some commentary here that overall the Chinese market does not see a noticeable recovery just yet, while it is expecting more AI demand in 2025 when the chip supply does move to catch back up. Just keep in mind, ADRs overnight were down 27% as well, so no big surprise, I guess, in some ways. We are seeing a substantial drop in that stock here in Hong Kong. Hang Seng Index, there seems to be this, I want to say, an imaginary line in the sand, speaking of 17,000 still seems to be a distant dream. Every time we get very close to that, it seems to pull back ever so slightly. So we're pulling back about 0.9% from the cutoff yesterday. 0.9% as well when you look at that today. The CGB rally 10-year yield and 30-year yield were pushing lower as well. As far as Asia goes, though, and speaking of government bonds, the big event coming up, at least as far as APAC bonds is concerned, is a 40-year bond auction in Japan. So we'll look at things like mid-yield to maturity, for example, bid to cover, just to get a sense of what appetite is like post-BOJ for longer-dated Japanese debt. Coming up in the shows here, we'll talk all things China. William Zarit will be joining us, of course. He's the former AmCham chairman, sentiment on the ground, and we're talking all things EVs and EV materials with Matty, Zhao. This is Bloomberg. Welcome back to the China Show. Just half an hour into this session onshore. CSI 300 on your right. A beautiful morning in Shanghai on your left. 0.4% on the broader MSCI gauge. We're coming off lows on most of these benchmarks. Going into the thick of the morning session, as you can see, this bounce off lows. We're down about 11 points on the CSI 300. As we've been talking about so far in the show, there's a very big earnings theme really permeating across these markets today. So everything from a lot of these sort of consumer-facing names, Nongfu Spring, Tsingtao Brewery was out, Haidilao also came out with earnings as well. AI is very much a theme, and when you look at GDS holdings, for example, 27% down overnight, 27% down right now. Mengniu, dairy maker, 7.4%. Speaking of beverages, Nongfu Spring not on your screens. That was actually a beat down to tea sales coming through as well. BYD, I guess this is the bane of every successful public company. Record year in 2023, but they missed forecasts from analysts though by ever so slight margin there. 1.7%. We're trading below again 70 Hong Kong dollars a pop in Alibaba on the back of news that the company was scrapping its plan to take one of its units, Hainiao, public. Okay, the broader read across, not just equity markets in the region, cross assets, dollar, everything from commodity markets, given, of course, what took place in Baltimore overnight. It's Nikkei 225, 0.9% to the upside. S&P futures, really, if you had to pick the big winner so far, this Wednesday morning is really still U.S. assets. I guess to highlight that very view simply on the currency front, right? Weakness across most of the Asian FX. Euro is trading lower as well, which I guess in some ways gives you an indication of risk appetite. In fact, in terms of on the data front today, we just flashed on your screens the print out of Australia. Let's start with that. In fact, on this very note, let's bring in Garfield Reynolds. He's with us right now. He's with our MLive team. Garfield, I'll start with, why don't we talk about Aussie inflation? So we're steady for a third month. Any read-through as far as the RBA might be concerned here?
Well, I think it's going to leave the RBA, David, very much sticking with that neutral setting that they moved to in this month's RBA meeting, because on the one hand, it's encouraging that there was some expectation it might rebound a bit further, a bit in February. It didn't. It stayed where it had come in for January. And on the sort of core readings, the news was also, kind of good, but only kind of good in the background that there have been concerns that inflation was going to prove not sticky from the point of view it would tick back up noticeably. It hasn't ticked up noticeably, but that rapid deceleration that had been in train, that's not being seen. So the RBA is going to look at this and say, hey, we don't really see the case for fresh hikes. We certainly don't see the case for any rapid pivot to cuts. So you had the Aussie dollar down, but only a bit. Aussie bond yields, also subsided, but rates traders stuck with August as their base case for when the RBA will move. That might even prove aggressive, again, depending on how the data develops. And in a lot of ways, the RBA is amongst those central banks that's very much seen waiting until the Fed makes the first move.
Right. Let me bring in the PBOC to that part of the conversation, because certainly the pressure on the PBOC to continue keeping rates low and perhaps even to ease further is somewhat Garfield contingent on what the Fed does, particularly when you look at the exchange rate and signals that they do want to keep their rates steady, but monetary policy and that gap between where rates are in China and the U.S. certainly is counter to anything that might be even mildly yuan positive. We have the PBOC governor. I believe he's set to speak this hour at a panel at the Boao Forum. What are markets looking at there as far as he's concerned?
Well, I mean, the most immediate question for markets is, okay, where's the new line in the sand? 7.20 yuan per US dollar was seen as where the PBOC was willing to defend the currency. They let that go. It was a big whooshing sound end of last week when the yuan really tumbled in the wake of that line being removed. So then China stepped in to stop it going from too much further. We had Mary Nicola on our blog saying, she sees it 7.24 as about as weak as the yuan should go based on the interest rate differentials. The bigger picture is that the yuan, like a lot of currencies, especially EM currencies, is laboring under the burden of continued dollar strength. And that dollar strength wasn't something the market was really looking for to the extent that we've had it, because the Fed was saying, we expect to cut rates this year and we expect to cut them 3 times. So it's like, okay, game over, the dollar should fall. However, the strong pushback from the Fed and the data backing that earlier this year have meant that the dollar declines people were looking for have not come. They may yet come, but as long as the Fed is in a not yet mode when it comes to rate cuts, you're going to have the dollar being in not yet mode when it comes to sustained US dollar weakness. That puts pressure on a lot of economies around the globe, a lot of especially emerging market central banks for whom the currency channel is such a vital part of their policy, economic, asset mix. So the PBOC just stands out more than most as facing that difficulty. And in a lot of ways, they probably have the thought that if we defend the yuan strongly enough around where it is now, we don't let it run away, later on in the year, we will get that relief. And the balancing act for the PBOC is they want to ease policy, they need to ease policy, but they also don't want the yuan to run away to the downside.
There are many ways to say it, but many of the central banks, to your point, Garfield, are simply buying time until the Fed starts to take rates down. At least becomes clear when they'll do so. Yes. Similar boat. The BOJ is perhaps the perfect example of that in the last 2 years. They had to buy time while rates were the opposite way. In the U.S., there's a 40-year bond auction. I think the results are coming out in about 90 minutes from now. There's a 40-year bond auction. I think it says 700 billion yen. We're looking at I think the last one had a yield of about 1.92. I'm just scrapping my brain for numbers there. How good of an indication would this auction be in terms of demand for longer-term Japanese debt today, post-BOJ, of course?
Yeah, well, it will be very interesting because of that. It's the one concern is that we've got Tokyo CPI numbers coming out tomorrow. That casts a bit of a shadow on the the long-term bond yields. I mean, the other thing that casts a shadow on long-term bond yields is precisely that Ueda and his board, when they eliminated negative rates, they pushed this very strong line that we're not about to start making a series of hikes. That immediate pushback was seen as being quite dovish. However, there is a growing constituency that says the BOJ is likely to either be forced or choose to carry out more rate hikes at some stage, especially depending on how their current policy shift is absorbed. So amid all of that, I'd be surprised, wouldn't be the first time, if there's a very strong 40-year auction. It might turn out to be weak given those concerns I raised about where BOJ policy might go, and in particular, that looming Tokyo CPI reading.
Garfield, thank you so much. Garfield Reynolds on All Things Rates out of Sydney for us, almost right on cue. As we were talking about the BOJ there, the BOJ boss is at Parliament talking about really how, well, for one, at the March meeting that they did judge that the price target was in sight. Other things, of course, to note as you look at this tomorrow, and this is more really the piping and the mechanics of the specific market, is that there's a massive expiry coming through in dollar-yen options. Level 150 spot 5, we're nearly $3 billion of dollar-yen options expiring there. So perhaps the risk there is crushing traders as perhaps intervention looms. And you know what? Speaking of intervention, 152, very close to that as we speak. Okay, we'll leave the Japanese story there for now. Coming up ahead here on the China Show, we get the market outlook for producers and suppliers in the China EV space. BofA Securities tells us how China will continue to be a dominant, or if not the dominant player across this specific market so this year. And just ahead, the Cohen Group Senior Counselor William Zarit joins us from the Boao Forum in Asia. Well, of course, they provide consulting services for multinationals operating in China. We'll dig into their business strategies, what they're hearing from their clients as well. That's coming up shortly. This is Bloomberg.
I don't see China as a threat. I advise everyone to not see China as a threat. And I certainly say to everyone in China, don't ever be a threat.
In the last number of years, we have brought our medicines to China to help patients. But in the last 4 or 5 years, innovation has boomed in China, and it has given many opportunities for us, but also other global pharma companies to partner with Chinese biotech companies.
To some of our guests so far today at the Boao Forum there in China, in fact, let's take you straight back. Stephen Ingles is our man on the ground there, our Chief North Asia correspondent, and what's looking like, Steve, a beautiful day, although I would imagine the camera does not do the humidity justice there where you are.
Well, after covering the BOJ in Tokyo and then the NPC in Beijing, I welcome the heat and the humidity, obviously. Not so much for our next guest, William Zarit. He is senior counselor at the Cohen Group, also the chairman emeritus at the American Chamber of Commerce of China and former chairman of that. You're not speaking on behalf of the board. You're here as a Cohen Group. You advise multinational companies on doing business in China. Yeah, it is sweaty here, isn't it? A bit hot. And
it's warm. It's a nice change though from Beijing.
Yeah, the political temperament also is a little bit hot right now. Obviously, it is something that the American businesses have to navigate quite delicately. FDI is down, in 2023 to levels we had not seen since 1993. There's a bit of a caution. What's the biggest piece of advice you give to companies wanting advice, and what advice are you giving?
Sure. Yes, the relationship has gone through a bad period, and we're still, I think, just coming out of that valley. Since San Francisco summit meeting between President Biden and Chairman Xi, we've confirmed that we're going to start talking in a number of different areas: commercial, cultural, military, all very important. We haven't really seen those dialogues get up and running in a strong way, but I'm optimistic we will, and I'm optimistic that they will be helpful. Having said that, I don't see any dramatic improvement in the relationship in the near future. If we can just get it on a steady basis, a balanced basis, I think that businesses will be able to make better decisions about investment.
Well, how do we get better business-to-business ties when the geopolitical temperature is so chilly right now? Obviously, the rhetoric geopolitically is quite strong still, even though there's a bit of a thaw after San Francisco, as you said. Now, look, we might be getting a meeting between U.S. business leaders and Xi Jinping today. That's what we're hearing. We have to read the tea leaves. That will take another step in helping improve the commercial climate, don't you think?
I hope so. And I think part of it depends on what he says. But I think what he's going to be saying is maybe quite similar to what the premier said at the opening of the China Development Forum, which was, the Chinese economy basically, yes, and uncharacteristically, he admitted there are some problems in the real estate and government debt, especially in the provinces, but that the Chinese economy plan is on track. And I think we'll probably be hearing similar things. Also, there's a charm offensive going on because the Chinese do understand that foreign investment over the last 30, 40 years has been instrumental in their growth. And they understand they need that. And right now, as you mentioned, it's falling off because folks don't know what future Chinese policy is going to be. Folks are also watching what Washington policy is going to be. And so they're keeping their powder dry and waiting to see what happens geopolitically.
Do you feel that those in the United States are getting the accurate story about China? I'm not necessarily pointing the spotlight on my industry, but that has been the allegations leveled by Li Chong and others who essentially say, again, Li Chong said, property market is not as bad as it's being reported. We have data that suggests otherwise, obviously. There is a problem. But do you think there is an issue of essentially the narrative coming from China is not representing a true situation?
In a word, I agree with you. And it's complicated. And I think the press is doing its best, the Western press is doing its best to represent what they're seeing. Part of the problem is there is not a lot of Western press in China. If we could get more press folks in China, I think we would be seeing a broader picture rather than focusing on areas that are kind of controversial or where China is put in a negative light. I think folks in Washington, especially on the Hill, and maybe even somewhat in the executive branch, are being very sensitive right now to what is being done in China, Chinese policies. So much China policy is based on China domestic consumption, just like in America, domestic consumption. And there can be misunderstandings about where China is going and so forth. Having said that, I think there is some basis on both sides for lack of trust.
Yeah, and it's an election year. So some of that suspicion obviously gets amped up on both sides. Right. Recently, I did talk to Ambassador Nicholas Burns. He talked about the biggest concerns that American businesses have. He hears them directly. And it's the issues that don't get a lot of press because there are not a lot of details. The opacity, whether it's policy, but also the arrests and the raids of consultancy firms. There's a concern that the geopolitics could lead to retribution against U.S. businesses. Yeah. How much of a concern is that, and how do you advise companies about that?
Well, I think that the fear coming from companies and individual persons in America about coming to China is overblown a bit. That if you're not involved in anything nefarious, you have nothing to worry about. However, like you say, there have been some raids on companies. Consulting companies, companies doing due diligence, Western companies, and we haven't really heard clearly why. Right. And folks that have been apprehended, some are still in jail in China. So you don't need too many of those anecdotes for people to, the risk assessment to go up. So it's really almost like the right hand and the left hand don't know what each is doing with this charm offensive coming out, wanting more Western involvement in the economy. And some of these cases where, no, that can't be right.
So can the charm offensive work? I guess that's my last question to you, because, again, the Biden administration is stacking up the export controls on advanced technologies. China is very much, every time I listen to them, they mention these kind of things as far as trying to essentially contain China's rise. I mean, these seem like irreconcilable differences.
Well, it's interesting because I think our Chinese friends forget sometimes, or conveniently, when they talk about protectionism. Oh, wait a minute. Who started the protectionism? National security. Who started broadening national security to almost every aspect of life? And so I'm not saying that what the U.S. I think is responding. And, some of the work that the committee on, the House Committee on Security on China, they're very aggressive, but there are some reasons for that. I'm not saying everything they do is spot on. So that's our situation. I think the Chinese leadership is full of very reasonable people, very smart people. Yeah. And I think in the U.S. there are some smart people in charge as well. And what I'm hoping is that we will come to a balance.
Well, the rhetoric sometimes in an election year in particular kind of rises above the reason.
Yes, sir.
So, William Zarit, thanks so much.
Thanks, Steve.
Cohen Group Senior Counselor. Enjoy the rest of the time at Boao. Okay, back to you guys.
All right, yeah, Steve, jump to a room with some AC, then we'll maybe drag you back out into humidity in a couple of minutes. A market roundup coming up. And by the way, we're talking about how do you play AI in Asia. That's coming up next. This is Bloomberg. Right, welcome back. We're looking now at this AI frenzy, and certainly some specific equities have just really outperformed the benchmark so far year to date. What's driving this? Let's bring in our Asia Stocks reporter, Yuk-Yung Lee, to maybe take us through Chapter 2 of where this goes next. So, yeah, talk to us about, Yuk-Yung, what's driving the outperformers this side of the world here.
Yeah, so if you look at some of the nations' benchmarks in Asia this month, the noticeable patterns in some of the outperformers, which are Japan, Taiwan, and South Korea, the common theme among these markets are the AI trades. And what's interesting this month is that we're not seeing the usual AI winners so far this year, but also those outside the usual AI winners driving the gains in the market during the month of March. For example, the usual AI winner in Asia has been TSMC, SK Hynix, and Tokyo Electron, but we're seeing gains outside of these stocks, such as Samsung Electronics or Honhai Precision Maker, and other stocks also rallying this month after they give strong forecasts on AI, for example.
Is it too late to join in?
Yeah, so investors and analysts seem to think that it's probably not too late to join the AI trades in Asia, even though some of the benchmarks are trading above the 10-year average in terms of their price-to-earnings ratio, because Asia seems to be the key beneficiary for this ongoing and growing AI infrastructure investment. You can't really talk about AI without some of the supply chain companies that are existing in Asia. So a lot of people seem to believe that there's still a lot of room to run for a lot of these stocks that are seen as beneficiary and crucial for the AI supply chain in the global world.
Well, speaking of stocks that are moving, just today, and I'm sorry to crowbar this in, but since we're talking to you anyway, one stock that's really moving there in Seoul is Hybe. Can you tell us why? What's behind this move today?
Sure. This K-pop stock Hybe has been rising almost 10% this morning, just after two interesting developments from the company overnight. One is that the company signed a distribution deal with Universal Music to distribute music labels such as the BTS and New Jeans. And another development was one of its major girl group, New Jeans, has made an announcement of a new album and is holding its first ever fan meeting in Tokyo Dome, which would be the first ever debut by a non-Japanese artist, which is very significant. So that has been driving the Hybe stock price gain.
Yeah, New Jeans also announcing a new album overnight. Sink your teeth into that. Yuk-Yung Lee in Seoul for us. The Tokyo lunch break is just ahead. This is Bloomberg. And gold is. Just in case you don't have a watch like myself or have given up watches altogether, 11:29 is the local time in Tokyo where certainly markets are headed into the lunch break. And by the way, really outperforming so far today. Might have to do with the fact that dollar-yen actually saw a slight leg up these last, I think 45 minutes or so, just coming up, maybe some of the commentary coming through out of the BOJ. The governor is speaking at Parliament, or was speaking at Parliament there over in Tokyo. There's a 40-year bond auction, and we should get the details of that bond auction in about an hour's time. So demand for long-dated Japanese debt post-BOJ would be the narrative there. Flip the page. We're looking at commodity markets. So on your screens, iron ore in Dalian, copper in Shanghai, Shanghai crude, gold futures. Bottom of your screens, copper LME price, 9,000, and coming up should be iron ore in Singapore. We did bounce off what? I think it was $100. 104 is where we are currently right now. A lot of themes to unpack as you look at these individual commodities. Let's bring in Matty, Zhao. No better person really to talk us through these key themes. Co-head of China Equity Research, head of APAC Basic Materials, oil and gas research, many hats at BofA Securities. Should we start with iron ore? Yeah. Sure. Why not? Okay. We were talking during the break, and you told us you were actually in China last week. You were visiting some of these steel mills. What did you find?
Yeah, so we brought around 10 U.S. clients to Tangshan. So first of all, like I said, U.S. flying all the way to Tangshan is already a lot of effort. So what we find is construction demand still remain weak. It is not only on the property front, but also infrastructure. A lot of the traditional infrastructure, especially those 12 provinces, are also considered quite weak as well. So on the steel demand front, the order books still not that good in a way. And then also the steel mills are saying that there's no government mandatory production cut at this moment. And given the iron ore and also the coking coal prices declined largely recently, the steel mills are making good profit compared to last time I come here. Like last time, I think they're making about 300 to 500 losses. Currently, they're already making 100 to 200 profits. So they're not thinking of more voluntary production cuts. You may see more production coming back as well. So on one thing, we may see that the iron ore has a little bit rebound with the production coming back. But on the other hand, the steel mills are also, the profit may be temporary with the production coming back as well. Most of the steel mills are expecting iron ore range bounding between 95 to 110 in the near term, given on the one hand demand is weak, and on the other hand, because they're making profit, they may be resuming as well. So probably need a little bit more restocking on the iron ore front as well. Yeah.
Okay, just to pivot, and I know there's a lot to talk about on EVs, but before we get to that, can you talk about gold a little bit further?
Yeah, of course. Yeah. Gold is one of the areas, together with copper, that we are pushing. We are more positive from BofA. One reason, of course, we are expecting rate cut, U.S. dollar weakness, but on the other hand, we are also seeing investments and also physical purchase very strong in both China and India as well. Physical purchase has been, quite strong. They're even talking about, the Chinese New Year wrap packet. Instead of giving money, we're actually giving gold beans instead as well in China last week. And then also, so it's interesting finding also that if the government purchase investment has been quite strong because of obviously this year is the election year globally, and also we are seeing a lot of political issues this year as well. So central government purchase is another lag that pushing the gold prices to be higher.
Okay, let's pivot to EVs if you don't mind, because I know you guys have done extensive research, not just on EVs, but the value chain. So I think let's start off with, and this week we had BYD reporting earnings. We also spoke with CATL, so quite timely. How large is the EV value chain globally?
Yes. So currently, we are expecting, first of all, the penetration rate. We are expecting global penetration rate to go to 40% by 2030, and for China to go to 70% by 2030 as well. So we are expecting the value chain to currently about $400 billion US to grow to about 1 to 1.2 trillion by 2030 as well. So it's a very big value chain, and China is basically a dominant role now in this value chain.
Right, so that's up three times, if you're correct. Market cap, do you think market cap grows by 3x too?
Not necessarily. It depends. It really, of course, depends on your competitive advantages and also technology improvement as well. Whether we can go to the prices lower, etc. Yeah.
Okay, so let's break down the value chain, because it's very complicated. Let's start with batteries, CATL. That's one of your picks, if I'm not mistaken, as well. How much visibility do you have over revenue let's say the next 3-year window?
Yeah, so our house is positive on CATL, and we are actually expecting volume growth to continue. So currently China is accounting for about 68% of the global battery sales, and 13 out of the 20 top battery is from China as well. I know that CATL and also Chinese battery is facing a lot of the hurdles on the trade barriers as well. But currently, we are still expecting our battery growth, export growth, to be about 25 to 30% per annum this year and next year. As well, and CATL, of course, within it, gaining market share. Also, that we are seeing with some of the raw material prices declining, it's also helping for this China value chain to be more competitive as well.
Okay, battery pack, so cathode, anodes, electrolytes. I know that sounds like Greek to some people, but what among that in that bit do you prefer, for example?
Well, we are actually cautious for all of the battery materials. Cathode, electrolyte, separators, and anode, we are all cautious. So we prefer battery, and also we are selective in EV, but for battery material, we are cautious. Overall, China accounts for 80 to 95% of the global share in this battery materials already. Again, some of them are also facing the trade barriers, and also a lot of the capacity addition. That's the main reason that we are relatively cautious compared to the battery. For example, I take cathode as an example. Capacity growth is more than 2 times, in the next 2 years as well. So it's basically not giving them enough bargaining power on the prices, and at the same time, you are also having, the exports, more export thresholds and barriers.
And within cathodes, is it a consistent story, or do you have a preference, copper, lithium, for example? Sorry to get that nuance. In terms of the metals,
yes. In terms of the metals, we are positive on copper. We are more neutral on the lithium. So for the copper front, we believe on the one go, it is a green energy transition angle. You have the grid on one side, you have this EV growth, and at the same time, also the solar growth to support it, the volume as well. So we are expecting copper demand growth to be about 2.5 to 3% per annum this year and next year. And at the same time, the mines are very tight. So far, globally, we are seeing 6 to 7% global mine disruption. So we saw, the First Quantum, we saw Anglo America, Teck Resources, a lot of them announcing mine disruptions. You have demand driver and supply tightness. So that's very different versus lithium. Lithium, we have great demand growth. However, supply growth is a lot as well. So we are kind of neutral after the big decline of lithium prices. Currently, we do expect that lithium prices are more range bounding at the cost of around 100 to 120,000.
So it's still too early, I believe, for lithium. Now, something that's come up consistently in your answers just now, I think every single answer you almost gave, is the regulatory risk and the trade barriers that are coming up across almost the entire supply chain, right? How do you model something like that? So what assumptions are you making? Do things get worse? And also, since China is such an important part of almost every bit of the supply chain, are some of the trade partners almost shooting themselves in the foot because they also have their own EV targets to hit themselves?
Yes, that's a great question and a lot of debate on that as well. So to give you a sense, China accounts for 64% of global EV, accounts for 68% of the EV battery. We account for 80 to 95% of the battery materials like cathode, anode, electrolytes, and separators. We also account for about 50 to 70% of the metals like copper, cobalt, lithium, etc. So we are very, very important now, or you can even say dominant in some areas. So you can't grow the global EV without China. In our base cases that we are expecting, the EV growth, EV export growth to be about 20% per annum. Currently, China is already the biggest EV exporter. We account for 15%. We overtake Japan and Germany last year as well. So we are expecting a 20% growth per annum this year and next year. However, we do know that there may be potential of higher tariff from Europe and also more ban from the US as well. So we do provide a bear case scenario, just assuming a lot higher tariff from the EU and also exactly ban from the US. So that's not our base cases, but our bear cases. And in that front, we are expecting maybe the export growth will drop from currently 20% to probably around 5 to 10% per annum. And also for U.S., probably by a zero growth to U.S. export by 2025 as well. But of course, we don't hope that to happen as well. It is just depending on how serious U.S. and Europe getting to own their own value chain.
Oh, and are they close to that at all?
No, we don't think so. We are just saying there are more conflict or there are more risk. But in our base cases, we still don't see that coming, given that, like I said, China is very important and it takes time to build a whole value chain. And also China have a more advanced in some technology. We also have cost saving and a lot of the cost advantages and labor advantages as well.
Fantastic. Matty, it's always great to see you. I'm amazed how you just pull things out of your head. just like that. Matty Zhao, co-head, China Equity Research, head of APAC Basic Materials, Oil and Gas Research at BofA Securities. Right, have a look at some of the other stories we're tracking across China this morning, or today at least. China is taking its dispute with the U.S. over EV subsidies to the World Trade Organization here. Beijing says the elements of President Biden's signature climate law passed in 2022 are discriminatory and seriously distort global EV supply chain. Now, Washington's top trade official, Catherine Tai, hit back, saying China continues to unfairly undermine competition and dominate global markets. Now, Bloomberg has learned some U.S. executives in Beijing for a business summit are actually extending their visit after receiving an invitation to meet a top Chinese leader. Sources say the meeting on Wednesday is widely expected to be with Chinese President Xi Jinping. Chief executives of firms including Pfizer, FedEx, and Amway are in the Chinese capital for the China Development Forum, which, by the way, ended on Monday. Now, turning to the U.S., and certainly the search and rescue efforts in Baltimore have now been suspended. That's after a massive bridge collapsed when it was hit by a container ship. Now, that's actually forced the closure of a major U.S. port. It's trapped about a dozen large vessels in the Baltimore harbor. S&P Global Insights, Commodity Insights, Rahul Kapoor told us that the disaster is likely to have a big impact on coal exports specifically.
For us at this moment, I think it's very difficult to put a timeline to it, right? It could be out for months at a time, and the waterways as well as the ports both could be shut in for that period of time, right? But just coming back to the impact, I think if you look at the coal exports particularly, right, the Port of Baltimore last year sent around 25 million tons of U.S. coal exports, right? That's the biggest market in our view which is going to be impacted, right? That's probably going to have an impact on the coal prices in the global markets, on the automotive supply chain. Like I said, it's something which can be rerouted as well as the containers and other segments per se, right? But not a big impact. It's an unfortunate incident, but the bigger impact in our view is on the coal exports out of the U.S. East Coast.
And what about what we see for cars and light trucks? Because it also is important for European car makers, for instance. How easy is it for them to also make adjustments?
Certainly, it will have an impact, but like I said, the supply chains are agile, right? So they will be able to divert ships. They will look at the port of Savannah, New York, New Jersey, and so on, right? So in the medium term, there's an impact, but if you look at a slightly longer term time frame, I think they will be able to basically able to absorb the impact of what we are seeing right now in the port of Baltimore.
In terms of other supply chain disruptions that we're monitoring, what are you most focused on at the moment? Is it still what we see in the Red Sea?
Yeah, I think that for us is still a pretty big one, right? What we are calling it is essentially what we call it as weaponization of a global shipping choke point, right? We have to understand that Houthis have disrupted close to around 50% of the trade through the Suez Canal, Red Sea. The container shipping traffic has primarily rerouted. You're looking at what's happening with the tanker markets, with the bulk commodity flows as well, right? So for us, it's a concern that this could be a template for the future conflicts. It could be Strait of Hormuz, China Sea, and whatnot, right? Houthis have essentially succeeded in raising their political voice and showing it to the world that this can be done.
Rahul Kapoor there on the potential impact we're seeing across, will see across commodity and logistics after that Baltimore bridge collapse. Apologies if I'm not looking into the camera right now. We have some breaking news coming to $-yen. It's now gone red on your Bloomberg terminal, has now hit the lowest or weakest level here in 24 years. It's taken out the previous high on $-yen, and we're now currently trading, of course, at the levels last seen back in 1990. On your screens right now, there we go, 151.92 against the U.S. dollar. Euro yen, just in case you're curious, we are trading in about the 164.36 levels as we speak. All that being said, immediately my mind goes to intervention and intervention watch, and almost right in cue, implied vol overnight, spiking 4.2 points. It's double where we were yesterday. So certainly this is one part to watch in terms of this options market. And by the way, we were talking about this too, right? There's a massive option expiry at 150. We have an entire story on that on the Bloomberg for you guys, nearly 3 billion yen. The expiry is on Thursday. So watch out for some of these key levels, but the headline for you is written bottom of your screens. The Japanese currency has now weakened to the US dollar to the lowest level since 1990. Plenty more ahead. This is Bloomberg. Welcome back. You're watching the China Show. The CEO of AstraZeneca says the pharmaceutical giant will continue to support China's biotech industry. That's even as the U.S. pushes for decoupling of global supply chains. Speaking to us at the Boao Forum, Pascal Soriot actually told us that, well, he sees innovation actually growing in China. Have a look.
In the last number of years, we have brought our medicines to China to help patients. But in the last 4 or 5 years, innovation has boomed in China, and it has given many opportunities for us, but also other global pharma companies to partner with Chinese biotech companies, take these products and bring them to patients around the world, in Europe, in the US, in Japan, everywhere. So, you know, we really focus on making sure we bring patients new medicines.
Before we get into some of the geopolitical issues, how fundamental has China become in the global pharmaceutical industry?
Well, actually, it's not yet tremendously fundamental, if you want to say it that way, but it is becoming rapidly very important. Certainly, the U.S. will continue to dominate innovation in our sector. There's no question for quite some time. But I think in the world, the second biggest provider or innovator in pharmaceuticals will be China, especially with new technologies, cell therapy, gene therapy, what we call antibody-drug conjugates, oligonucleotides. In the old days, we were bringing small molecules, antibodies, and that's what we did for many, many years. In the last few years, large number of new technologies have emerged, and that's where the biotech companies here in China have focused.
What is going to be the ramification, the biggest ramification of the Biosecure Act in the United States if it does become law? And essentially, this legislation that's going through Congress would essentially ban Chinese pharmaceuticals from getting federal contracts if they are deemed to be of concern on national security grounds. Does this benefit you, or is this bad for the global pharmaceutical industry? Because it essentially, at the end of the day, will limit access for patients who need particular drugs.
Well, you know, I think it is always important to try and facilitate collaboration in science and the exchange of information and the sharing of new data and the sharing of new inventions. So I don't think it will necessarily affect us because we are sourcing those products, we are basically developing them, we're going to manufacture them, and so we will manufacture them in China for China and some countries, but we'll also manufacture them in the US or in Europe for the Western world. So those will be very, very segmented activities. The fact that the product was invented here doesn't mean the product is necessarily sourced from China for the entire world.
So that's an important delineation, essentially, because this law could prevent Chinese pharmaceuticals that are developed here from going into the world's largest market, that is the United States.
Yeah, we have very large supply chains, and we are organizing ourselves so that we can actually supply the United States and Europe independently, and that's what we do. And we also are building our presence here in China, so we can actually supply Chinese patients independently. So I think the fact that a product is invented here doesn't mean it will be manufactured and supplied out of China.
That was Stephen Engel, and also the boss at AstraZeneca, executive director as well, and CEO Pascal Soriot there. At the Boao Forum that's taking place, in fact, we'll have more from the forum a bit later on in the show. Right, just ahead, we've got a spicy story that perhaps we're going to sink our teeth into here. Mala, yeah, how one Chinese city is looking to capitalize on hungry tourists and how one firm is actually benefiting from that. The China brief is just ahead. This is Bloomberg. It's time for today's China brief for a check really on what's making headlines in papers and also trending online. We'll start things off with a look at the People's Daily and focusing there, at least the People's Daily, focusing on the Boao Forum taking place in Hainan, and certainly after the conference released its report for 2024. It says the momentum for Asia's growth remains relatively strong and cites experts seeing confidence in the resilience of the Chinese economy. Meanwhile, you have an editorial in the Economic Daily calling on authorities to crack down on false reports and inappropriate comments that damage private enterprises. Now, this does come in context here is after Chinese beverage giant Nongfu Spring and its founder actually faced boycotts this month. Now, let's turn to a Chinese city that's actually gone viral over its dry hot pot dish. We're talking about the city of Tianshui that's in northwestern province of Gansu. Gained traction in Weibo after its malatang, that spicy soup. Now, the dish, like a soupless version of hot pot, Tianshui's variety features a sauce made of dried pepper that only grows actually in Gansu, which is one of China's poorest provinces. Some users note that the irony of a historical city like Tianshui becoming famous for malatang. The city is an ancient Silk Road hub, home to just under 3 million people. Others, of course, think it's just another PR move, which, much like the barbecue craze that gripped the city of Zibo last year. Either way, a taste for this has sent the shares of a local producer of mushrooms jumping. Mushrooms are, of course, a very popular malatang ingredient. Also jumping